In this video, I'm going to show you how you can make potentially 21.6% per year solely on dividend income. The 10 largest US companies that pay out a dividend average about 1.72% per year. That means if you invest $100,000, you'll receive roughly $1,720 in dividends per year. I love free money, but 1.72% isn't exactly striking it rich on passive dividend income. But there is a way you can make a lot of money on dividends. It's just going to be hard. Take, for example, Coca-Cola, which pays a 2.72% dividend. Better than average, but nothing to really cheer about. But what if you bought Coca-Cola in 1995, when its stock price was $15.94 per share, adjusted for any stock splits? At the time, it paid 88 cents per year, equating to a 5.52% dividend. Pretty good compared to today, but not something as worthwhile. But what if you had bought Coca-Cola back in 1995 and held it to this day? As of this video, Coca-Cola is at about $65 per share. $1,000 invested in Coca-Cola in 1995 would give you 62 shares. Today would be worth $4,030. Sure, a 4x return in almost 30 years is nice, but the dividend is what we want. Today, Coca-Cola pays out $1.76 per share in dividends. Because you own 62 shares, that's $109.12 in dividend income. From your original investment of $1,000, you're making a 10.9% return per year on purely dividend income. The secret here is to hold a dividend-paying investment for as long as you can. Even something small can pay you a lot someday. Warren Buffett's longest investment was indeed Coca-Cola when he first started accumulating it in 1988 on behalf of Berkshire Hathaway. At the time, Coca-Cola was at $2.29 per share, adjusting for any stock splits. The dividend yield was 1.74%, smaller than it is today. It paid 4 cents per year in dividends. Coca-Cola was already a well-known brand even back then, so don't think you need to find an unknown sleeper today. Let's say Buffett bought $1,000 of Coca-Cola back in 1988. He bought a lot more than that, but let's simplify things. He'd owned 436 shares of Coca-Cola, which paid him $17.44 in dividends back in 1988. Fast forward today, and Coca-Cola is worth $65 per share, valued at $28,000. $28,000 is nice, but again, it's dividends that produce that high return. Today, Coca-Cola pays $1.76 per share, and he owns 436 shares, paying $767 per year in dividends. That's a ridiculous 76.7% return on his initial investment every year just from dividend income. It doesn't matter if Coca-Cola's stock price never grows again. Buffett is making 76.73% return on Coca-Cola every year. With a combination of stock appreciation over decades, your dividend income will be worth so much later down the road. It's not even individual stocks either. You can invest in an S&P 500 index ETF and get a similar result. The SPDR S&P 500 index ETF, SPY, first paid out a dividend in 1994 with a stock price of $27, paying out 71 cents in dividends. Let's say you bought $1,000 worth of SPY back in 1984, giving you 36 shares. Today, SPY is around $400 per share, which will make it worth $14,400. Today, SPY's dividends are $6 per share, which is about 1.54% as of this video. That means you get paid $216 in dividends, which is a 21.6% return on your initial $1,000 investment. Dividends are more than just a tiny percentage you see today. So what are your thoughts? What dividend stocks do you own? Comment below. And as always, take care of your money.